Good morning, everybody. It's Monday, October 14th. This is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here had December corn down 3.5 at 412.25. November soybeans were down 6 at 999.5, and December Chicago wheat was down 3 at 596. We are through 9 of 23 settlements for the harvest price discovery period for crop insurance, so almost halfway home. Corn is currently sitting at 424, and soybeans are at 1031. Good morning, guys. Hope everybody had a nice weekend. We've got a little bit of rain on the radar for South America here this morning. It appears like the models are becoming more and more in agreement for a return to the wet season in the 10 to 14. So, and, we're bumping up against, kind of the middle to back half of harvest here as we keep rocking and rolling, and the weather's still great for getting this crop out of the ground. So, Dustin, maybe a few thoughts to kick us off this week, and we'll throw it around the room.
Yeah, Dan, thank you. Yeah, between the currency moves and ongoing harvest pressure, I think that's what we're feeling coming out of the weekend. How much is continuing to be delivered, and what's that sell pressure look like? One thing to consider, switching back over to the U.S. weather, we're still quite dry, and the forecast for Memphis River levels by the end of October is now back down to minus 9.7. So it could get pretty interesting here on the river, just the demand for futures. So you're watching how that March spread goes is, I think, going to be critical. Last year we did get down to 2,600. We're only at 17.25 right now. I look at that average forecast in the European model for the next 14 days. We're averaging only like 0.6 of an inch, so it's way below normal. For this time of year. In the last 30 days, we've had about 50% of our normal rainfall weighted average for the Corn Belt. And a lot of that upper, Missouri and upper Mississippi basin is where, we're down to like 0 to 20% of normal rainfall during that 30-day window. So all of that is kind of feeding into this concern. If we don't start seeing that rain and that relief to the river system, we have to remember these contracts are really geared to go downriver. And there's other reasons for me to think that the spread might widen, which is mainly that we were already full. The pipeline was already full coming into that time frame, but the river definitely adds a little bit of insult to injury to that system. And now it could be some sort of saving rain here before we get to the end of November, we get to this delivery window. But I do think that's going to be a focus for the market here.
Yeah, they're starting to dredge down by St. Louis, I read this morning. So, I mean, it's a crazy deal. Ben, what's on your thoughts, or what's on your mind here as we start the week?
Coming out of the report, I felt like there was probably a lot of people that were looking for a bigger reduction in soybean yields, and they didn't get it. We saw a pretty swift sell-off, got below our 50-day moving average in beans, and we saw selling continue overnight there. I think it becomes a little bit of a canary in the coal mine to what we can look at maybe for D's corn, which is going to come on a month later. So if that appetite is there for managed money to get short again, will be interesting to see in corn. I think fundamentally they're two different beasts right now, especially as we see rains materialize in South America. I think that's starting to feel better and better that that's going to happen. It'll be critical to see follow-on rains, not just shower, and maybe this is the transition into their rainy season. So report didn't do enough to feed those who were long. I think that we still have a significant amount of corn left to harvest and a logistics system that is probably not really well geared for it this time. That being said, we did see December and January basis on the Ohio River pop over the weekend. So I think corn has some business down out on the calendar, but we have to be able to execute it, and we could certainly do a lot of damage between now and then until we actually get to that. So kind of neutral here, not overly bullish or bearish anything. Ryland brought up before we got on significant amount of open interest in the $10 puts and beans. And I think it'll be pretty hard to get everyone paid on those. But
for November.
yeah, for November, they go off, what is it, in a week, Friday?
Yeah. Yeah.
So just things to be, to be concerned with. Corn sitting on its trend line, the nice little run up that we had following SEP first notice day, and 5-6 cents below here, we hit the 50-day moving average. So I think it's the first real test for people who are friendly corn.
What's interesting too, I mean, we got the funds, essentially feels like neutral in beans right now, at 19,000 contracts, and corn, 35,000 or so. I mean, it's hard to believe that, looking back to July, you had the 356,000 short corn, and
Well,
by all,
I think
go ahead.
Same for wheat. There's not a tremendously large short there across all three classes, and
Right.
probably for good reason. And looks like maybe we're starting to see a little bit of moisture into the Ukraine-Russian areas that need it so badly for their winter crop. So it'll be interesting to see how grains react here as we get into space starting to get filled, river levels low, and the actual mechanics of delivery start to play into the markets.
Jace, what's on your mind as we start the week?
Not much to add there. I agree that the report was some probably expecting some reduction in yield that they didn't see. And, so saw kind of a weak reaction in soybeans, right? We were, if you're going into the report, you had beans up 8 or 9 or 10, and then, we closed, down 9 or 10. So, not surprising to kind of see that turnaround. The dollar's been strong. So, that's kind of a headwind for grains for sure. The real is kind of making a bad trade, made a bad trade on Friday, and some follow through here today. So we're now below the 50-day moving average in that currency. Some of that short-term demand, I think, that we've seen, or some of this demand, I should say, that we've seen, has probably a lot to do with the river levels, trying to get that grain out, while it can. The Chinese trying to probably buy some ahead of this big election, right? So I think those could all end up, being some, that lack of demand, I should say. I'm not calling for it, but maybe that short-term demand spike, maybe starts to teeter off over time. So we'll see coming in the end of harvest. On our farm, we're rocking and rolling, picking corn as quick as we can, and it's just coming out perfect. I was riding along with my brother for a while. They were picking, 290 bushel corn, 16% going right into the bin. Now you have to run to the dryer. We switched to another field that was doing 19 or 20%, so we were kind of excited that we actually had to turn the dryer on. But yeah, so I think that's everybody right now, right? Weather's good, we're gonna go hard.
How much you got to go, and how much you got to go out by you guys?
We still probably have half of our corn left. We're done with beans, maybe 2/3 of our corn, but at the way we're moving, and if the weather stays the same, I mean, we could be done in 7 to 10 days, just going hard every day. So as long as things don't break, you never know. But I think the attitude of the farmer is things can change, right? So you go until you can't, right? You can get one windstorm to ruin the party. I think all these guys they're going hard in these bushels, and I was kind of talking to my dad. We just built some new bin setups, so he's added 100,000 bushels of storage. But before that, with this harvest, we wouldn't have been able to store it. I mean, the yields that we're seeing, we would have had to find room for it. And I think a lot of people are going to be running into that at the end of harvest, right? Normally they could store it, or normally they have a home for it. But I think by the end, after you do that, right, you don't really think about it until you start to get to the end. Like, what are we going to do with all these bushels? So I think that could just be an end of harvest pressure that, we wouldn't typically see without a large crop.
Sure. No, that's good stuff. Dustin, one thing to note too, and I alluded to it a little bit before we started here, we are almost halfway through on the harvest price discovery. So it's going to be more and more difficult to move this price, but also becomes more and more important as you're losing coverage, right? I mean, Jace makes a great point. I mean, you got folks in Northern Illinois that's not a backstop anymore, essentially. on the crop insurance side?
Yeah, I mean, many people have out-yielded themselves for crop insurance, so we might be talking to a small group here. The areas that have an 80 or 85% policy that got really hit with weather, you need some yield loss in those deductible policies to be in a payment. You'll get some from price action, right? We had our prices set at 466 for the spring price for corn, 1155 for beans. We're below both those levels. So there's some revenue loss from price, but at those higher deductibles, like, your standard RP policies, 80, 85, you need yield loss to be at an insurance payment as well at this type of a price. But specifically talking to those guys that have lost yield, or did buy like a 95% policy, whether that would be MP in the fall, it would have been September 15th cutoff date to buy that, or ECO, which is another way to get 95% county-based policy. Now, those ones are much more likely to be in the money at only a 5% deductible. And, you average out that price in the month of October. So after today, we'll have been 43% averaged out, which means the only way we can move the needle is the other 57% of days that we have to expire here. That's going to be moving at almost half the pace after today. So think about it this way. If you think your guaranteed revenue is going to protect you, the market drops $1 from here, you're only going to get 50 cents of that dollar, right, in a payment, because you're already averaged out on the first half of the month. So you want to kind of think about that replacement of that coverage if you haven't done so already. As we're falling, this is kind of the worst time for a rally for those policyholders. Was the pre-October rally, and now we're getting the post-settlement sell-off here. If it keeps going, especially like last year, that's where a lot of people that had been counting on that policy will be left with maybe a smaller payment than they would have otherwise hoped.
No. Very good. And as always, if you've got any questions, as it pertains to your individual operation, reach out to us. We'd love to visit with you. info@agyield.com. Ryland, let's quickly visit a little bit here on livestock. Cash is below futures, and we saw a real slow slaughter last week. So what are your thoughts as we start the week?
Yeah, I think just the action last week kind of spoke for itself. I mean, we saw cash prices a buck higher. We're 187 generally for the live price for last week, which would have been a buck higher, and then 296 in the north for dressed. Managed money was confirmed to be supporting this rally. I mean, obviously Packers are paying higher prices. Cutout has just been rocking. I mean, we got up to 311.22 on Friday. It's up 127. So I mean, like, it just you just keep on pushing this market higher. And even though Packers are margins are still in the red, we're seeing that reduction in slaughter to kind of compensate for that. So overall, it seems like we're kind of hitting that point, where you just got to be a little bit cautious, just because it looks like a lot of the trade was waiting to see something out of China that kind of spoke to the more supporting or stimulus of the agricultural products over Saturday. Really didn't see any of that. So I think on the commodity side of things, maybe anybody that was really banking on big stimulus from China or some kind of announcement isn't seeing that coming into today. So we'll see how it all shakes up. And Managed Money, added 13,000 contracts, almost 14,000 contracts since last Tuesday. So they've been the ones supporting this rally. And you're seeing it in the hog market as well. It just seems like hogs are really they were trying to make that play before October expiration. And now we got big commitment in December. And that's also getting pushed out into February and April. The hog market, cutout generally flat, cash generally flat, but the futures are just rocking and rolling. So we'll see if anything changes after this weekend, just with not a lot of headline news or anything out of China. In the hog sector as well, Managed Money bought 13,500 contracts. So, I mean, obviously the Managed Money has been supporting this. I would just say that you kind of need to look at protectionary measures, just with everybody getting along at this point and dogpiling into the trade. And there just isn't that. I mean, we're seeing it on the cash side of things in cattle, but not so much in the hogs. So I think that's where you just got to be a little bit cautious in both places.
Very good. Appreciate the update. Just came into the open here. We got December corn now down 3 3/4 at 411 3/4. November soybeans are down 6.5. Excuse me, 9.99 1/4. and December Chicago wheat's down 4 at 595 1/4. A couple of things administratively to point out: crop progress and conditions will be delayed till tomorrow afternoon, as well as export sales will be delayed till Friday. Everything pushed back a day here because of Columbus Day holiday here today. So with that, we appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like or subscribe. It'll keep you up to speed on everything AgYield. So once again, appreciate everybody that supports the show on a daily basis there. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good conversation. Hope everybody has a good start to the week, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.